I grew that business from like 250K in the first year in like 2013 to like 30 million in like 10 years. I think it was about 2022 was like close to 30 million.
He's the CEO of King B Vans, a $50 million fleet business that scaled from a small loan of $2 million from his family members. No, I don't know if that's true or not. But he scaled the business from 2 million to 18 million in just a single year.
And then grew that quite rapidly. I think this year we'll close, or last year we closed at just about 100 million in revenue.
Wow.
And we started that business in mid 2021. I think it's really hard for entrepreneurs to then convert to CEOs. They're two different jobs.
Yeah, 100%.
When you're an entrepreneur, you have to be overly optimistic. And when you're a CEO, that is a mentality that can kill you. It's heavy, and I think that's a tough transition for sure.
All right, hey, welcome back to another Friday Habit. And today my guest is Scott Haslam. He's the CEO and co-founder, of King B Vans, a $50 million fleet business that scaled from a small loan of $2 million from his family members. No, I don't know if that's true or not.
I wish.
But he scaled the business from 2 million to 18 million in just a single year. And so he's got a lot of knowledge on growth and strategy on what not to do, because by day he's building a 1,700 van nationwide operation, but by night he's a DJ throwing underground sets from a converted military truck. So that's also strange and interesting.
Very strange.
Dude. So, welcome to the podcast.
Yeah, thanks for having me, Mark. Excited to connect with you and your audience.
Yeah.
It is.
Yeah, so your name came across my desk like last year, and I think I took a look into it, and I was like, oh man, this guy seems interesting. So would love to have him on the show. Tell me a little bit about, did you grow up in Salt Lake City? Are you from Utah?
Yeah, from Utah. Twin brother, identical twin brother.
Identical? Like how identical?
Pretty damn identical. I mean,
okay.
Yeah, pretty
Did
identical.
you guys ever like do a little switcheroo or fake out your girlfriends or like your parents?
Absolutely. You got to take advantage of what we've been given,
Yeah.
We did some silly stuff in our day.
Yeah, I bet, dude. That's awesome.
Yeah.
What are you guys' temperaments like the same, or are you kind of different? Is he the white collar accountant and you're the DJ?
Honestly,
problematic business.
Problematically, we're just so similar. I think we're an amalgamation of OCD and ADHD.
Okay, nice.
I maybe got a smidgen more of the OCD, got a smidgen more of the ADHD, and that creates a lot of problems for us, for sure. Yeah. But also a lot of opportunity.
That's cool. So are you guys in business together?
Yeah. So we started the first business I started is called Base and Upfitting. It was like a truck equipment upfitting business. And we started that together. And that was a business we grew quite rapidly. It was like truly like out of a driveway, like just started installing. We were converting vehicles to natural gas. We started installing like shelving and racks and things into commercial vehicles, and grew that business from like 250K in the first year in like 2013 to like 30 million.
Wow.
In like 10 years. I think it was about 2022 was like close to 30 million. And then just being a serial entrepreneur started, once you get in kind of a niche business space and you start seeing all these opportunities of like, hey, this could be so much better. This could change. And so ultimately started King B Vans out of like kind of just getting to know the commercial vehicle and fleet business, and where there was some gaps and opportunities. So, and then grew that quite rapidly. I think this year last year we closed at just about 100 million in revenue.
Wow.
And we started that business in mid 2021. So, happy to tell.
Yeah. So, before we get too deep into the business and all that stuff, I want to just graze over this DJ thing. How long have you been DJing? And is that like a stress releaser, or what's the whole thing there?
For sure. I mean, I think all entrepreneurs are by nature creative, and probably overly optimistic. And once you get into the building of business, you get excited about coming up with, solving problems. It's a creative outlet and then you get a business to a point where you really, now you've got this machine that you need to operate, and it's no longer an idea factory, and it's something completely different. And so I found a creative outlet in, I was a musician, played in a band, a lot of my youth. And so,
what kind of music?
Mostly like indie electronic and that kind of stuff. But I mean,
EDM
I'm 40, so I played way back in the day, like screamo, like. So I've been through the gamut of genres of music for sure, but got more into electronic in 2010 or a little earlier, and started getting more into like the EDM side of things, and then got into business. Really had to get out of the music game, and then really just needed a creative outlet when this thing started taking off. And I was like, it was less about being a DJ and more about curating events. I do DJ them from time to time. But generally what's fun for me is, I've built this taking this massive military truck. They call it a Hemet. It's like an 8x8 massive truck. And then, we have this truck equipment business. So I was able to utilize the shop to fabricate a bunch of, things. We built a big top deck on it for people to stand on it, and then a DJ deck, and fabricated big lift gates for the speakers to drop up and down. We have a huge speaker system on it that's super nice, super boutique. Set up this big kind of light tower, and then I just throw, when I'm feeling the itch to like do something creative, I'll throw a rave, and it's truly a rave. Like we own a little junkyard. I'll put the truck in the junkyard. We'll put up a bunch of cool things around the truck. We'll bring in typically like one international like artist. Yeah, that's just like a typically really good like underground DJ.
Nice.
We'll just throw a party till 4 in the morning.
Pop-up. Yeah, when you and I were kids. I'm a little bit older than you, but yeah, I remember in high school. This was like the late '90s. It was like one of those random things, right? Where it was like, oh, there's like this rave. It started off as just an inside thing where like a couple people told, and it was like going to be some warehouse somewhere downtown in a seedy part of. Yep. And then it's like, you come to school on Monday and be like, did you go to the rave this weekend? It was like crazy. There's like no security, people sneaking in. It's just like wild.
That's the best to do. Like, and Denver is such a good market for that. I mean, there's such a good scene there. Like Utah's pretty small relative to Denver. But yeah, I mean, and raves are the best. Like the vibe's always the best. It's like everyone's just there to party and have a good time and like let go. And that's my favorite part. Is for me, it's like a space to just like let go of my troubles for the evening, and then create a bunch of new troubles for the morning. So and that's what I love about it, is just I get to create and curate this thing, and people come in and get to experience it.
It's wild. Look, and if you're listening to this or watch this on YouTube, go over to the Instagram page and check it out, because it looks like some otherworldly, like Mad Max like vehicle.
Crazy looking. It's called Ranger Sound Car. Go check the Instagram out for sure. But yeah, it was just kind of one of those like really the whole purpose was, I went to a cool event, and it was out like way in the middle of Idaho, and it was like 300 people there, and it was right by the river, and somebody just built this really cool stage and made it this really cool experience. I was like, man, wouldn't it be so cool if we had a truck that you could just, because Utah's got so much beautiful nature around us. We've got salt flats, then mountains, then go down to like Zions or whatever. It's got so much beautiful nature. And I was like, I just want to be able to drive this thing, like hit a button. Like you remember the old Goofy movie where he hits the button on the RV and it goes,
and the whole thing
like pops up. I was like, that was in my head. That was my favorite thing as a kid. I was like, that's what I want it to do. I mean, it doesn't quite do that. It's more like a 3-hour setup, but I wish it could.
But still,
And that was the idea. It's like, hey, we take this anywhere. Just tell people, hey, show up. We'll drop a location or a pin. It's more turned into I just keep throwing them in my junkyard because it's easy. But eventually that's the idea. Is like, I mean, this thing could go just about anywhere. So
that's so fun, dude.
Yeah.
So, did you go to college? What was your initial dream that did you want to be? An investment banker or a doctor?
No, I mean, I always had enough, ADHD to have a hard time in school. Like I did go to college. I got a bachelor's degree in political science. I knew that I wanted to be an entrepreneur and put myself through college by, running window cleaning business and just little things. But I always just knew I wanted to be in control of my own destiny. College for me was like, go get a 4-year degree because, additional education is important. And I wanted to do something that was interesting to me, which was political science at the time. In this political environment, not so much anymore. But but as soon as I got out, it was purely just like go start a business, go figure out how to start a business. And that's what I did. I mean, I think I graduated in 2012, and we were just right then like in a driveway trying to convert vehicles to natural gas. And I just ended up in the automotive space, not because like I'm a big automotive guy necessarily. It's just we found a niche and opportunity that just continued to evolve as we got deeper into it and learned the industry.
Yeah.
And
what do you tell people as far as that goes? I mean, I run into so many people that talk about wanting to buy a business or start a business, and they're always like, what should I do, or how should I go about this? I mean, were you doing a ton of market research and looking at profit margins and all these other kind of things before you got into this? Or was it something that you just Googled and to figure out how to do something and then started offering it to people? And what would you say caused you to, I mean, it sounds to me like so far you've had very lucky opportunity. Like every time you put your hands to something, it's like, oh, it seems like it's successful.
Yeah, no, I mean, I've certainly been very lucky in that respect. And I think, when I first got into it, like I had very limited like business knowledge. Like when you're talking about getting into the finance mechanisms of the business and understanding, the general ledger and all that stuff. I mean, I learned all that along the way and like, nearly sunk the business a dozen times, trying to figure it out. It really was, for me, it was, I knew I was good at selling things, personable, charismatic and passionate about what I was working on. And I was creative and curious. I liked figuring stuff out, and that was a solution to a problem that also had, economics and opportunity, and kind of just pairing those things together initially. And then once you get into the business, especially that, this wasn't, if I went and bought a business, I wouldn't know where to start at that time. I think that's a fantastic path for people, especially with kind of how many, of the generations going to have, the boomer generation is going to have a lot of opportunity of really good, solid businesses to buy at a good price. But I think for me, it was more, it really started from, again, the driveway, the ground up. And every day you're just, the mentality and the focus is that like you're always just thinking, what is the next problem I need to solve? Like what do I need to do? What are the 3 things I need to do over the next 18 hours? Rather than trying to build this big vision, you're just trying to sell and build revenue and figure out the rest. And so, through that, learn the general ledger, learn how to borrow money, then raise money, and all of it just came from, getting out and doing it, It's just, hey, this has to get done. I'm the only one that's going to do it. And so I'll do it. I mean, there's times I learned how to weld by welding a flatbed onto a truck, and, God knows somebody might be injured somewhere from that, those welds, but just little things. You always just fill the gaps. You wear a lot of hats. And then eventually where I'm at today is like, all of a sudden you're out of the business. You're just working on the business. You're raising capital. You're building strategic vision. And it's a strange, kind of change up from really living in the weeds.
Yeah.
Out of the weeds. And but yeah, I mean, you're always.
At what point was that, with your first company, did you sell your first company or did you?
No. I mean, it's still, in fact, we still, I kind of, sold, it was me and my twin brother that owned it 50-50. I kind of sold it, did like an equity swap with him when I started King Bee, and him continue to operate it. And then now we're kind of back in, me jumping back in kind of the captain's chair of was like overseeing the business. And because it has some common, like verticals with our rental
how
business.
did you with, I mean, it blows my mind, with King Bee, I'm thinking you must have had to borrow a ton of money to get vans, right? Because I'm thinking you're building, you had this vision, right? Of like, oh, hey, I think if we have a bunch of these vans, we can get them rented out or whatever. And I'm sure you did all the numbers to figure out like how many you needed in order for it to be profitable, but how many, like how often they needed to be rented out and all these other kind of things. And so how did you go about that initial idea? Did you put together some sort of business plan, or did you use your other business to fund, the money for the next business idea? And what was that like during that season of seeing maybe this opportunity and then going for it?
Yeah, for sure. So, with base and upfitting, I mean, it was bootstrapped all the way, but it was bootstrapped. But then once you really start to learn and understand what finance mechanisms are out there, that's when you could really scale a business. You have to understand the borrowing money is what grows a business, and there's
or that's really what should do it, right? This is something I tell my kids, like, if you borrow money, you better make sure that money is going to then work for itself. Like, don't just borrow money and then buy a TV or something that's not going to be an asset that won't be able to generate more money from you, because then that's how you end up in debt and ruining your life.
Yeah, absolutely. I mean, you gotta make every dollar count towards the growth of the business, and that's a process and takes a lot of iteration of figuring it out, and a lot of just like accountability. But there's so many resources out there, even down to like what SBAs are out there to start out with. And that's where I started. I think our first loan was like $100,000 SBA line of credit, and just understanding what your borrowing base, what you have available in your business to do. And once you start generating a little revenue, you can kind of go do that. So, and to me, I look at growing at least capital opportunity is there's two paths, right? If you already have the money, you can put it in the stock market and passively grow it, or put it into real estate or whatever. And what's unique about a business is you don't have to initially have money to go generate value. You put sweat into it, and then you're kind of combining. Really, once you start growing, you're combining capital and sweat to maximize the return. So, you say you can get 10, 12%, whatever in the stock market. You can get multiples on that just by it not being a passive, but an active. I'm creating value with this money, actively. So that's how I always look at it. And that's why I got into the rental space. Now, we've got, I think today, $250 million in balance sheet assets and $200 million in debt. And I mean, it's a scary, hard place to be, for sure. A million different covenants, and I'm personally guaranteed on 17 lifetimes worth of actual actual capital that I have.
Right.
But once you kind of learn that and learn how to leverage capital, that's when you could really scale, right? You could build a really good business without necessarily borrowing a lot of money. But if you want to scale, and you want to scale quickly, specifically, you'd have to have capital.
Where did the idea to scale, or where did that come from? As far as walk me through a little bit of the early stages. Did Amazon move to your town and you're like, hey, they need rental vehicles, like we should be the provider for these? I mean, you hear a lot of these stories, especially like in the military, like someone gets a contract with the military to, do X, Y, and Z. We had a guy on our podcast recently that built these like armory cases, and they were just doing in the consumer sector, and then somebody in the military, and then they had this big contract, and it was like overnight they were, successful. Yep. I mean, what were you doing to where all of a sudden you had this idea like, hey, we should do these van rental things?
It kind of started out, I mean, with base and upfitting, we were having conversations. I was having conversations every single day with, fleet owners, home services, construction, primarily initially. And what I always saw was how long it took for them to get the vehicles that they wanted. They wanted to go, you want to go walk in, pick up the vehicle, drive it away, put your tech in it, and go start making money.
Right.
And, that's just not how it works. It's just you're trying to marry up multiple pieces of that manufacturing process, from the OEM that produced the vehicle to the upfitting company to the signage company, so on and so forth. And I saw this specifically with vans, and so I was like, hey, I bet we can build a rental business it's not like a daily, weekly rental. It's more like we're taking on the ownership of the asset, and we're going to these companies and saying we can rent this to you. It's available now, and you want to get a tech in it. We had an immediate success with solar. So I put together a business plan. I talked to a gentleman who had done a similar business and learned how the economics of the business worked, which the simplicity of at least automotive rental is you go you build volume, you get big volume discounts. Vehicles by nature depreciate, and so if you can get a big discount, you lower your depreciation. You go generate cash flows on it, and then every, say, 18 months, you're churning that, and you're getting the equity out of it. So you're getting some cash flows that's covering debt service, some OpEx, and then really once you sell that thing, you built in some equity, and then you're just multiplying that. So today we're at almost 8,000 vehicles and growing, and so that's where it started. We started doing really well in solar. Solar was super hot, and they just needed vehicles to put their technicians in, and there was no rental companies providing anything other than a bare cargo van. So we thought, look, we can throw some shelves or racks on these things because we know how to do that and do it efficiently, and make these way more valuable to them, customizing them, and then there's within 24 hours they can come to us, hey, we need 10, 20, 30 vans that have shelves and a ladder rack, and within 24 hours they can have them. So that was the concept.
Yeah, which is great. Especially I think about when our former co-host on this show, my dear friend Ben. He designs websites, right? But then he uses the platform Squarespace. So Squarespace is dealing with all the security and all the back end and all that kind of stuff. And then he's just saying like, hey, there's a market of people who need a Squarespace website. I'll just build on top of that. And so it makes all the headaches and all the difficult things for me easy because it's already provided by a bigger company. So you're kind of doing the same kind of thing with the physical, product where it's like, hey, the solar industry is blowing up. They're going to start hiring people hand over fist and need vehicles and need them outfitted right away. Yep. You're just kind of hitching your wagon to a business that's already being successful and having some traction.
No, I mean, that's exactly it. I mean, I think that's what's critical is that you're always looking at where's the opportunity. And then you're thinking, for me, it was, the fleet space is fairly antiquated. There's a lot of volume opportunity in fleet, if you talk about fleet leasing, rental, all that stuff. And then, the upfitting side, the rapid signing side, there's just so much opportunity, and it's all fairly fragmented. And so that creates this big gap of when a vehicle is going to be available to the customer. And so to me, it was, vertically integrate all of those pieces. We already had some of them, vertically integrate some of the rest. And then go make sure that you're doing something 10 times better than the competition, which for me, for this specific industry wasn't hard.
The bar was pretty low.
The bar's pretty low. I mean, you think about think about airport rental, the experience you've had at airport rental.
Yeah,
today is the same as it was 30 years ago.
Yeah, and that's what blows my mind. It's like I get in this line at the airport and I think it is 2026 right now, right? I'm like, can't there be some sort of QR code that scans? And I just what am I doing here? And then you sit there and they're typing on the computer. I'm thinking, what are you typing on the computer? I already checked in online, and now you're sitting here typing for 15, 20 minutes. I'm like, what are you putting in?
It's crazy. And I was like, man, this is crazy. But it is and I know why. It's because it's such a high barrier of entry. The rental market is like a barbell. You've got a bunch of really little guys, nothing in the middle, barely anything in the middle. Then all these really big guys. The little guys might have a few hundred vehicles, and then the big guys have hundreds of thousands of vehicles. And we're kind of a rare mid market, and it's hard to climb out of that. The reason is because it's so capital intensive, right? It's limited economics, and you need to borrow a crazy amount of money, and so that just takes long time to build up a balance sheet to do that. And so we've gotten creative. So, the first couple years we were growing quite rapidly. We got to about 2,000 vehicles in 2024. And it was all our own, on our balance sheet. All the capital we raised, I mean, the initial capital that we got was just I brought in partners. I love having partners, by the way. I love.
Do you? Okay. Cause I feel like it's one of those things where it's never go into business with somebody else.
No, I as long as they're committing something that you win together, you lose together. That's generally it's always money, but my partners always have to be active, and they always have to put some cash in, or my executive team specifically, because I want to win together and lose together. And so, but yeah, I mean, we started out that with kind of our own very limited amount of money, and then went to a private credit group and got the rest. And my CFO ended up coming from that private credit group. So we got
nice.
initially from them, but very expensive money, but I just happened to have some partners that at least had the street cred to help me get there. And I had some street cred with Basin, so that's kind of where it started. We got to about 2,000 vehicles, and then we needed to scale. We're hitting a wall. And I saw another business that was more of a technology business that was trying to disrupt the rental space called Fluid Truck. I just saw that it was struggling because we would go up and compete against them, but I saw their operations was a little rough. And so I contacted the private equity group that had invested in them and really over the course of that year hammered out a really complex deal where we bought them out of a bankruptcy and bought this business that was once worth $350 million for, it was like $10 million that was, and the money came from the private equity group that had initially invested, $100-ish million into it. So we ended up getting that deal done, and it really changed so much for our business and really shifted our focus to a solution service-based kind of business that's technology focused, that's really disruptive to the rental market. And I can get into that if you want. But what was interesting is, like, for me, if you're an entrepreneur, you're always looking for opportunities, and you're saying yes a lot. And as the thing gets bigger, then you got to be more and more careful of what you're saying yes to, right? But you really do initially just need to say yes to a lot of things and just get creative and figure out ways to make value out of that.
Yeah. What you had that jump, right, from 2.6 million to 18 million. Like, that's a pretty big jump. Was there anything in particular? Was it just adding more vehicles to the fleet that helped you to grow like that? And then what kind of logistics had to change as you started to grow the company? What were some of the roles that you were hiring right away? And are you guys a pretty lean team, or do you have like a lot of employees and stuff like that?
Yeah, I think we were a super lean team, about 40 people, and you're always trying to hire just to your need, and you got to wear a lot of caps early on and do a lot of the business process. That's what I did. So and a lot of us did, but really the biggest jump, like the 2 to 18 million, was big, and it was really because we were getting to a place where we can borrow more, get more vehicles, and we had built a really good product and path, and we were doing well with it, and so we just we added a bunch more vehicles. But the big leap was I think going from like the 18 to I think 2024 we were 18 or 19 million. I think this 2025 we were like 100. Dang. Like, and that's the bigger you get, the harder it is to multiply that growth curve, and so that was a big jump. And when we bought this Fluid Truck, part of it was we took all the employees on, and it was like we went from a team of 40 to a team of like 240 overnight, which was crazy experience, because now you're running a completely different business.
Right.
Luckily, we had some good people to help us along the way. And now we're more like 160, 170 employees in that range. We're built to scale. We're probably a little overstaffed because we're trying to get to about 15,000 vehicles this year. But yeah, it's such a crazy jump to go from you're kind of living in the weeds and doing everyday things, and to all of a sudden you're kind of trying to get the 30,000 foot view and make super high level decisions every day that without having a connection to everybody on your team, right?
Yeah. How have you felt like you've grown, or like what are some things that you try to focus on just personally for development and all that stuff? Because unless you hire someone, right, like you're just a chairman, executive chair on the board, and you have a CEO, like people are looking to you, right, for answers and maybe to close big deals and all these other kind of things. So how does, like, it seems like you have to almost grow up really quickly.
Oh yeah. I think it's really hard for entrepreneurs to then convert to CEOs. They're two different jobs.
Yeah, 100%.
When you're an entrepreneur, you have to be overly optimistic. Like, you have to believe so hard in yourself, and everybody's not going to believe you can pull it off. And when you're a CEO, that is a mentality that can kill you. You need to be thoughtful about your decisions. You need to bring people into them. You can't Wile E. Coyote things all the time. It's a hard transition, right? It kind of drains you a little bit, because it is fun and meaningful to have like this energetic optimism about everything to then go to, I have to like really think through this because it can sink the business.
Right. And instead of having just 40 people that you're going to have to be like, hey guys, sorry. Things are tough. You got like 170 people rely on you.
There's so many. I mean, that's a heavy burden. And so it is. I'm still in the middle of that transition of like, because it's only been a year that we really made that big leap. And it was a heavy year for sure to all of a sudden be something completely different. And again, it's like that creativity bug you kind of have to put to the side a little bit and focus on, good management structuring and being a good delegator and having the right people and motivating them. And like, just so much change, being excited about a product and a business idea.
What's that saying? They say, the things that got you to where you are aren't going to get you to where you want to be.
Yep. I mean, you got to constantly be growing for sure. And so that is that's an enjoyable part of the process, is sometimes getting to look in the rear view and say, man, like it's crazy where I am from where I was a year, 5 years, 10 years ago. But yeah, it's heavy. And I think that's a tough transition for sure.
Yeah.
So, but yeah, I mean, I really liked it. And, obviously the bigger you get, the more opportunity you get. Amazon was one that started out small, and we just continued showing up and providing value beyond what their other strategic partners were providing. And they continued to give us more and continue to give us more opportunity. And that's really the critical thing, is that you just, my mantra is do what you say what you do. And I feel like if you can stick to that in business, you can be successful. Like, obviously you gotta be motivated and work hard and driven. But I see so many people that overpromise and underdeliver, and that's just the fastest way to see yourself out the door,
Yeah. What are some of those things, these assumptions about the business? How do you intentionally break those? Or like, what were some things that you saw like in the business where like, oh yeah, people are doing X, Y, and Z. You could be way more efficient if you did it this way instead.
Yeah. Yeah. I mean, at first it started, what we talked about is like, if we customize these things, nobody's doing that. And that's a big value add to a market segment out there. So we do continue to do that and provide that. The big thing that's changed is when we bought Fluid Truck, we've really built the business around an app-based, contactless kind of rental process. The idea is eliminate the rental counter. If you're a renter of our product, you get on our app, you see a vehicle available, you go reserve the vehicle. There's an inspection that you do, a pre-inspection through the apps, take a bunch of pictures. It's all AI based. We put in specialty telematics into the CAN bus so we can control remotely the ability to unlock the doors, and then also like demobilize the vehicle. So through the app, when they're doing these steps, it's then unlocking the doors and then immobilizing the vehicle so they can drive it away. When they return it, they have to do the same inspection process, and then it automates a report of any potential damages. It gives them all the pictures they took before and after, and says, "Here's." So what we did that nobody has figured out how to do, and I think it's because we're starting at the vehicle level itself, the telematic hardware in there. What we did is make this business so much more efficient and friendly to the renter. So much more efficient operationally for us, because we don't need to have, we've got vans in pretty much every state, but we don't need to have attendants and desk people and cleaners and all that stuff. We leverage third party for certain things, but for the most part, like these things can trade hands without anybody on my team getting involved in that. And that's the big game changer. And what I'm excited about is to take that technology conceptually and go into the bigger rental markets, the airport rental and the retail. Not us owning the vehicles, not us, rather than getting away from the asset ownership side of the business that is so limited to, and hard to scale.
Right.
And focusing on going and providing that value to the big rental companies that own all these vehicles. And they're just focused on getting them monetized and utilized.
Yeah.
And having a solution that can make that. I want you to walk into an airport, look at your phone, see all the vehicles available in that airport with the various providers on my app, say, I want that one, click on it, reserve it, walk straight into the garage, pick it up, drive away.
Oh,
right.
Man, that sounds like a dream.
And that's the goal. The long-term goal that we're focusing on, and we're building that technology and workflow on our own kind of assets.
Yeah.
And take that out to the market.
So you envision yourself kind of morphing from a rental truck service, physical equipment to a tech company.
Yeah. Yeah. I mean, I think my favorite thing is just finding how to scale and scale quickly. And so the reason why the rental company could scale quickly was because, we borrow money, we find users, we put them in contract with them, but then we hit a wall of like, once you get into that's such a large amount of money borrowed, like I'm just constantly all day, every day spending money or spending time trying to raise additional capital to grow the fleet. And I'm taking a lot of risk because it's limited economics. This is something that is like, hey, I can provide this solution, have a revenue opportunity tied to it without necessarily the debt, and the liability of the asset. And so I can have a revenue tied to somebody else's liability, but also improve their economics and opportunity. So that's, to me, like, okay, that actually potentially grows way faster than where I'm at today. So let's shift gears. Let's focus there. Let's continue to build this part of the business, at a moderate pace, kind of slow down, let it kind of grow organically now, and focus on how do we go provide value with this technology that we built for ourselves, and now we can go, introduce it to others.
Yeah. I mean, you hear so many stories of companies doing that, right? They kind of solve their own problem within their business. And then it was like, oh, there's a need for this in the marketplace. Yeah. Let's sell it,
Yeah. So, you see that a lot with technology companies too, right? Like, one of the largest dealer softwares out there started out as a rental company that built a software that now like most every dealer in the country uses, and they got out of the rental business. And you see that a lot in tech, I think. And with what's happening now with AI, like you can do so much more.
Oh, yeah. It's crazy. A buddy of mine, he was working for this company, and he saw this really inefficient spreadsheet process that was taking place, and he just went on like a vibe coding platform like Bolt or Lovable or whatever, and then he just came up with his own app that he could plug in the spreadsheet, and then it showed all the data and gave so much more in-depth information about what's going on. And I'm like, dude, this is $1 million idea, like right then and there.
Yeah, absolutely. It's wild. And I'm always so impressed with guys like that are just can figure that stuff out, like on the tech side.
Yeah.
But business, the big shift we're going to see is, how quickly businesses can become efficient in it's going to start in departments of the business, right? It's not like, hey, this app, this AI is going to solve the big business problems. It's going to solve little chunks at a time and simplify them and automate them and do things, that all of a sudden, the whole business can become more efficient and cost comes down, and therefore prices come down. So it's and then they win the competition because they can operate more efficiently. So it is crazy. Like I think, if you're going to utilize and understand where AI is going to help you, you first have to understand where, you need to have kind of, I think, a business in general that you're trying to solve problems for, and then trying to think through how can an AI agent or something like this slightly improve pieces of this.
Yeah.
So, but it will be the next few years is going to be pretty wild to see.
I know, 3 to 5 years. I'm like, we're going to live in a completely different world.
Completely different world. Yeah. I mean, you see Mark Andreessen and these guys talk about it, and they're like, this will be the biggest technological advancement in my lifetime. You think, well, the internet, what about the internet? It's like, no, this is bigger. I hate to be on that AI train because it's ad nauseam.
You're so cliche, Scott, with the AI talks, kicking 2026 off.
So tired of hearing about it. But when you introduce it into your business, you're like, oh my gosh, how hell is this do? And, it's just crazy when you just start introducing little pieces of it into your business processes. You're like, wow, this is insane. Like how efficiently things get done that used to take a long time.
Yeah. I want to go back to the partner thing and just unpack that a little bit. What did you stop trying to do alone that really unlocked the next level of your growth? And maybe where are some areas that you thought, I'm not good at this, I need to bring this in right away?
Yeah, I mean, you should always understand that the cheapest capital is borrowed. Equity is the most expensive long term, right? But when you're in the early stages, as much as you can, stay away from giving up ownership for cash. Like bootstrap as much as you can and borrow as much as you can to grow the business, because that equity gets expensive. And we've done quite a good job at really preserving the vast majority of the equity. And it's less about your kind of, your exit economics and opportunity. And it's more about control of your vision. But at some point, especially with a business like ours, where lenders need to see, they want covenants or whatever of like a certain ratio of equity to debt, or, multiple covenants like that. You have to bring that in. And that's where, I can tell you there's about 1 million different ways to structure equity and debt. So many different ways. There's so many different groups out there that are experts in it, from what we call senior debt, which is your cheapest form, and is typically asset backed. You got mezzanine, and sub debt, where you can kind of leverage it in a second position, to like pref equity, which you can structure in ways that is convertible or non-convertible. There's just so many ways. And it's just about understanding like what's important to you. And what's always been important to me is control of my vision and the company, because equity always needs to see returns and multiples over 3 to 5 years. Like that's what they want. And so, the more you take of that, the more expectation there is going to be that you're selling the business or you're getting out of the way or whatever. And if you're motivated by the business process and the concept and the idea and to be disruptive, that can really derail you fast.
Mm-hmm. Yeah. Where do people go, do you think, to start learning about some of this stuff? Because even some of the things you just said about debt and certain types, I'm like, I never even heard these terms before. You're playing in the $100 million big boy league, of debt management and stuff like that. So, like, where do you think is a good place to get educated on some of this stuff and, learn more?
No, that's a good question. For me, like it has been, obviously having, everybody's got some finance bro in their life, right? Yeah. Like, obviously these guys are, that's what they do and they understand it.
Just go to a networking event in your local town and find a finance bro.
I'm a finance bro. But honestly, like what's been an incredible resource to me is Reddit. I love Reddit. I love, there's a lot of subreddits that you can find.
You are 40.
I am 40. Yes, it is. You're right. It is. I am in the demographic of Reddit.
You're in the demographic. It's us 40-year-olds that is like Reddit. Like people younger than us are like, what?
I know we TikTok. We're Reddit users for sure. I'm like, what is TikTok? But yeah, Reddit's been a great resource, and even just like a local bank, like they want to support you if you're on the very small side. The SBA is so favorable. The government, the United States government wants new businesses. They want people to start businesses and grow businesses.
We make the most of the economy, right?
Yeah, exactly. And I think that's, like very supportive. Learn real quick. They'll tell you like, here's the things that have to be true to do this. Once you get, the first money you get, it may be a little bit of family or friends money. The next money you get should be SBA. From a bank, and you're developing go to a local community bank, always develop a relationship, because they will be way more supportive and helpful in understanding. They'll be way more lenient in, downtime or, where they're in a risk position or you're in a covenant violation. And that's where we started. And they're the bank that I got my very first $100,000 loan from is, I've far stretched their capacity years ago, but I still do a lot of business with them just because they now that they've invested in me, they continue to invest in me. Whenever I need something done quick and I call them and they know I'm good for it. Mm-hmm. So, but yeah, I think there's a lot of resources out there, but I think at the end of the day, it's going to be like the school of life a little bit. You're just, But I think that's the starting point, really. Like, if you're a small business, you shouldn't be looking at equity, private equity. You shouldn't be looking at any of that stuff. You could look at, these kind of like private credit groups, but they can be pretty predatory. You got to be real careful.
Yeah.
As
what about like an American Express line of credit or
those? Yeah, I mean those things are always helpful to lean on.
And this isn't financial advice, everybody. We're just spitballing about what's worked for us.
Make sure the SEC knows that. Not financial advice. I'm not an advisor.
That's right.
No, I mean Amex.
But you are a DJ.
I am a DJ. No, yeah, I think credit cards are helpful, but more for cash flowing, not for long term borrowing, because they're expensive. I mean, you're trying to make. If you're trying to make 30-40% margin if your capital's borrowed on a 28% interest rate, like you're gonna struggle. So yeah, it's those are helpful. And you honestly, if you're gonna get into business, you need to get comfortable giving your personal, and you got to really believe enough in yourself that you're gonna personally guarantee things. You're gonna kind of put your personal credit at risk. That's just the way it is. Like, you got skin in the game and you gotta.
Well, and I think that's one of the things that I've learned over the years is I think to own your own business, to work for yourself, to be an entrepreneur, you kind of got to have a high sense of risk. You have to have a high tolerance for risk, because there has been so many times over the past, decade plus where I didn't know if money was coming in or not, but I just had the hope, right? You were saying like we're eternal optimists, where it's like, I think it's going to work out. It's going to be okay. And
Absolutely.
then like the 11th hour, it's like, oh yeah, something comes in and it's like, see, I knew it was going to work out.
I know.
But it's like I have so many friends that would like throw up in their mouths if they knew some of the stuff that I've had to, carry and stuff.
Crazy times. I mean, I've almost sunk King B a few times, and it was like, what's hard is when you get into business, the more it grows, the bigger the problem is to solve. So solving a $50,000 problem, there's a lot of resources, and solving a $5 million problem, there's very few. And so that's the hard. I mean, there's been times where I'm like, I'm having to come up with millions of dollars in the next 3 weeks, or this is done, right? Or we're triggering a covenant violation. I mean, there's just so many, and I've been backed up, against those walls, and you just have to, again, be such an optimist, and you get on the phone and you call everybody you research every possible outlet for capital. And that's what I've had to do that a few times, and it's a miserable space to be.
Yeah.
Miserable, but you come out on the other end, a little battered and bruised, but 10 times better for the next time, because it'll happen in every business.
Right. Well, listen, Scott, thanks for hanging out, man, and just chatting with me and, sharing your life experience and your business with us. So I really appreciate your time. And if people wanted to connect with you, maybe come see a DJ set, like what's the best place?
Come in and want to go, follow us on the Ranger Sound Car Instagram, and come check out it. We're doing one on Saturday, actually. Come check out the event. Or, I mean, I'm open, DM me or whatever on LinkedIn, or I love connecting with, people who are just, trying to build and supporting them. That's probably my favorite part about business. So thanks so much for having me. It's been a blast talking with you, and I look forward to connecting with you some more down the road.
Totally, 100%. Well, hey, thank you for listening to The Friday Habit. If you go to thefridayhabit.com, you can find show notes for this episode. Yeah, you can also get links to our websites and ways to get in touch. And at the bottom of the page, you can download our guide to the Friday Habit system that'll help you set aside one full day each week to dedicate working on your business instead of always in your business. You can hit us up at hello@thefridayhabit.com. And until next time, remember, live every day like it's Friday.